Good afternoon, everyone. On behalf of India Factoring and Finance Solutions, I welcome you to today's webinar on minimizing banking and forex costs and the outlook on global currencies. India Factoring is a premier trade finance institution registered with the Reserve Bank of India as an authorized dealer 3 in 2009, and it holds an NBFC factor license. Our flagship offering, the non-recourse product, helps clients to avail factoring without the facility appearing as a liability in their balance sheets. Such niche, structured trade finance products from India Factoring offer ease and flexibility in managing working capital requirements of businesses by funding an agreed percentage of invoices soon after shipment of goods or after the services have been rendered. I am Ramanathan and I handle risk management for South Zone at India Factoring. I shall be your host today. Our guest on today's show is a highly acclaimed professional in forex markets. Mr. Amit Pibari, Mr. Amit Pabari is managing director and founder of CR Forex, where he formulates strategies for various treasury risk management programs for corporate clients. He has completed FRM certification and is a chartered financial analyst in addition to his master's in finance from ICFI University. He is involved with research and prudent management of market risks, inclusive of foreign exchange and interest rate risks. With more than 15 years of experience in functioning of forex markets and developing strategies for mitigating forex risk, he advises large corporates in areas of currency and banking cost reduction and setting up best treasury practices. His presence on various media platforms like CNBC, Financial Express, NDTV Profit, and LiveMint, where he shares his opinions and views, coupled with his expertise gained from working with various banks, helps him to add value to his clients. Before we start, I would like to inform our clients that when factoring is availed in foreign currency from India Factoring, there is no forex risk. This is because we fund in the same currency as that of the invoice and we receive payments from buyers in that same currency. Okay, so with that introduction out of the way, I welcome Mr. Amit to start the presentation. Over to you, Amitji.
Thank you for your kind words. Let us start today's presentation. I think my screen is visible.
Yes, yes.
Yeah,
Please go ahead.
yeah. So before we start, let me make some promises. The first promise is that I will keep the presentation very, very simple, and I will be sharing some key information with respect to reducing the banking forex cost and ideas where global currencies will be moving in coming days. At the end, I will say if whatever questions you have, you can write it down. At the end of the presentation, we'll be answering it all. So, in today's presentation, we're going to discuss three things. First, cost saving techniques, currency outlook, and then hedging strategies. Now, in a business, if you want to improve your margin, there are two ways you can do that. First, either you reduce your cost. In today's presentation, we'll be giving you key ideas how to reduce your banking cost. Second is to increase your revenue. If you hedge your exposure in a right manner, definitely you can get alpha on hedging. So today we'll discuss that on the second part of the presentation. So now let us start with the first part of the presentation. So the first question, whenever I go and meet any exporter, I ask them whether you are getting correct interbank rates or not from your bank. So whether you are getting that correct or not, there are three ways to measure it. The first way is the first step is basically you have to fix the interbank margin with your bank. When I meet a lot of exporter, they have a lot of them have not having a correct idea at how much margin the bank is charging. Just like interest rate, we have to have a clear cut writing with the bank at how much interbank margin they are going to charge you. For example, if the current rate is 82 and a half level, then if they say they are going to charge you 5 paisa margin, then the net rate what the bank should give you is 82.45. That is step number one. Step number two is a lot of exporters think that if you give better collateral or better credit rating you have, then your interbank margin will be lower. But that is a myth. The entire interbank margin depends on two things. First is uh, which bank you are dealing with, and second is you know what kind of volume you have. So if you have higher volume, then the interbank margin will be lower. It has nothing to do with credit rating or collateral. The second step in the entire process is that you have to have direct treasury access with the bank. When I say direct treasury access, it means that generally what happens, exporter goes to branch goes to direct treasury in Mumbai or Delhi or Chennai, and then they give the rates to the branch, and the branch give rates to exporter. So if an exporter can get a direct treasury access, then he's eliminating the middleman which is there in the presentation. And if they do that, the rates will automatically improve. And the third point, important point, is that generally I have found that exporters verify rates from google.com or an xc.com. Let me tell you, google.com or an xc.com are not a legitimate source of getting rates because they are all NDF rates. And if you're using an xc.com, then there are certain disadvantages in xc.com. First disadvantage is it is delayed by 1 minute. Second, you will not find an export ka rate and import ka rate. So only you will get one rate. Third disadvantage is you will not get forward premium, neither you will get cash pot or term spot. So basically, in order to verify the rates, you have to take rates from a legitimate source like a forex consulting company like CR Forex. They will give you rates which are quoted in Indian market. So if you do these three steps, definitely your conversion rate will improve. Second, now let us move to the second part, second cost which is important. When I go and meet a lot of exporter, all of them have a common thing. What they do is that whenever they get inward remittance, they just convert that on an immediate basis on a cash rate. Now, if you are doing that, before doing that, let us do some kind of a calculation. ये इसमें दिख नहीं रहा है. Now, can you see the presentation? Sorry, there was some technical issues as far as
Very
presentation was
much,
concerned. Yeah.
very much. Yes.
Thank you. Thank you. So basically, for an example, if today rate is 82 and a half, and if the bank is quoting you 4 paisa cash pot, that on 1 lakh dollar, you, if you just convert that, you will get 4,000 more, basically, if the cash pot is there of 4 paisa. Now when we are doing that, we have to think that what is the interest cost of that 2 days. In annualized term, the interest cost for that 2 days is coming to 8.8%. That 4,000 rupees is nothing but 8.8% interest rate on an annualized term. Now, if the bank is charging you an EPC interest rate of 6%, then it is advantageous for you to take on spot rate instead of going for a cash rate. So whenever you are converting your money, I will suggest you that you should definitely validate that. In CR Forex screen, we have this advantage where you can go and calculate that. Okay. Right. So now let us move to the key takeaways. What is there with respect to rates? The first key takeaway is that you have to fix your interbank margin with the bank. Second key takeaway is that you should have a direct treasury access. Third key takeaway is that you have to validate whether to convert on a spot rate or a cash rate. For that, you have a calculator. And fourth, whenever you are taking rates, you should get forward premiums and valid cash pot. So now let us move to the second cost. Uh, Give me 1 minute. I think whenever we are having animation, that is not coming in the presentation, Ramanathan.
Yeah,
So
I'm not sure why that's not happening,
yeah,
but
because again, this is creating a problem. Give me 1 minute. Let me fix that technical issue.
sure, sure, sure.
Now we can start. Sorry. Can you
Sure.
see the screen?
Yeah, I think it's loading.
Okay.
Yeah, we can see it now.
Yeah. So the cost here, the second cost, what lot of exporter pays is a bill collection charge. So I went to a seafood exporter. He was saying me that the bank is charging me bill collection charges of 0.6 or rupees 2,000, whichever is higher. And I went to another seafood exporter. He says the bank is charging me flat 0.6% on all my bill collection, whatever bill I send for collection. Then we suggested the exporter is that you should write a letter to the bank saying that they should not charge you bill collection on a percentage basis. Instead of that, they should charge you on a flat basis. So, for example, on a monthly basis, if you are having 20 bills and if they are charging you 0.6%, so total cost will be close to 11 lakhs for that exporter. Now when he went and he said that the bank is going to charge him on a flat basis, the cost got reduced by one third. The logic what I had given to the bank is that, for example, if there is a courier guy who has a responsibility of sending a check from one city to a next city, and the courier company asks me that if the check value is 1 crore, you have to pay me 0.6% of that check value, and if the check value is 3 crore, you have to pay me 0.6% of that 3 crore. The banker was able to understand what point I am telling him in an indirect manner. Basically, when he's sending a bill for collection, he is doing the same work what a courier company is doing when they are sending one check from one city to another, and the banker were ready to charge the client on a flat fee basis. So next time when you are reviewing your cost, and in that cost, if the bank has written that the bill collection charge, they charge you on a percentage basis, then do write a letter to the bank saying that I want a flat charges on all my bill collection. That is a very, very important takeaway as far as bill collection charges are concerned. Now, when I meet a lot of exporter, one of the problems they say that we do not book forward as we are not sure on which date our payment will come. So to them, I give the solution. The solution is that when you are getting delayed payment, and if you are not booking a forward, then you should do a far forward, and then you can pre-utilize that forward. Let me give you an example for the same. Now, say for example, you have shipped a good in the month of October. You are expecting a payment in the month of March, but because of some delay, the payment might not come in the month of March, and the payment comes in the month of April. How do you save yourself from that? So basically, you go and book a forward for July 2023, and then when the money comes in the month of April, you will pre-utilize the forward which you have booked for the month of July. By doing that, what you do, you can solve three problems. First, you are hedged on your exposure. Second, there is no fear of forward cancellation. Third, if the payment comes delayed, you are still getting earning in terms of forward premium. Now, definitely, if you are pre-utilizing a forward contract, there is always a cost into it. Now let us understand what are the costs. There are two kind of costs. First is swap point, and second is interest cost. Interest cost. Sorry. Let me explain that to you. Say, for example, today, if I have to pre-utilize a forward which I have booked for the month of 31st July, the rate what the bank had given me is 84.32. So you will open CR Forex screen. In that screen, you have to find two things. First thing is what is the cash pot today. So the today's cash pot is 3.2 paisa, and then you will see what is the premium. So basically the premium is 89 paisa. So 3.2 and 89, you will minus it from 84.32. So the net rate what you will get is 83.39, which is much higher as compared to today's rate of 82.60. So basically by doing that, you make a profit of 0.79 per dollar. Total profit comes to 3,95,000. Now you have made money. I have learned in last 20 years, whenever you make money, there is always someone who is ready to take some part of it, either the government or the bank. Definitely, if you are pre-utilizing a forward contract, the banks are going to ask you a profit, some percentage on the profit. That is called interest on the prioritization. So how do you calculate that? It is very, very simple. You can calculate that in CR for a screen, but let me explain that to you. Your forward was of 31st July. You are prioritizing it today, which is 172 days ahead. So the bank says that I am going to charge you an interest say at a 10% for 172 days of the profit of 3,95,000, which will come approximately close to 15,000 odd rupees. But by paying that 15,000 odd rupees, you are safe with respect to cancellation of forward contract or not hedging. So it's a very nominal cost. Now, I was having a meeting in a city called Coimbatore last week, and I met an exporter who is exporting close to 250 crores. He asked me one question in the meeting. He said me, last week I canceled some forward and the bank have not passed the profit to me. So then I have explained him an RBI circular saying that if you are booking a forward contract under contracted basis, which means that you have got an order and based on order you are booking a forward contract. Then the RBI rule says that, or you can say that the correct definition is FEDI rule says that on cancellation, the profit has to pass to you and the loss is also supposed to be debited from your account. That is, if you are booking under contracted exposure, which means that you are booking against your order. Now, the second rule says that if you are booking under anticipated basis means you are not having a confirmed order in your hand, but you say I am booking based on my business projection. So the rule says that if loss happens, then the loss has to be debited on an immediate basis. But profit will be passed to you on a cash flow basis. It means that whenever the money comes in your account, on that day, the bank is going to give you profits. Now, let me give you an example for the same. See, for example, I did a booking on 1st September of $5 lakh when the forward rate was 83. On the November in the month of November, I have cancelled that at 82. Now the bank will give me this profit when actually the cash flow of $5 lakh come to my account. I will convert it on spot or cash basis, and I the bank is going to give the profit to me. So that is the rule as far as cancellation profit passing is concerned. Now, like that, there are a lot of costs which the bank charges. What I tell people is that they should validate all the cost what the bank is charging to you. So now, a lot of exporters has been complaining that if we are not getting correct rates or if the bank is charging higher, then we should change bank. I say that changing bank is not a right and a prudent business decision. We say that the older the relationship with the bank, the better it is. It is like a wine. The older the wine gets, it is more beneficial. I give an example to anyone young who joins in my company, saying that husband and wife may प्लस माइनस होता है तो what do? You do not go and take a divorce, rather than you go and talk. So similarly, when there is a problem with the bank, do not change the bank, just go and negotiate. 98% of the time, it is my experience that the bankers will listen to you, and whatever supernormal profit they are getting from you, they will reduce that supernormal profit to a normal profit. Now, in CR Forex, what do we do? We have a service called CR Forex Audit Service. In that, we do two things. First, we see what kind of a cost you are paying to your bank on your forex side. If we think that the cost what you are paying to the bank on the forex side is on a higher level, we try to reduce that cost by educating the client and by negotiating with the bank. Second thing what we do in the audit is we do past verification, which means that if the bank has said that they are going to charge you 8.5% of interest rate, whether they have charged you 8.5% or not. If they charge you more, we take a reversal for the same. Now, let us move to the second part of the presentation. Before moving to the second part of the presentation, history is my favorite subject. So let us go back to history. Now, the year 2020-21 was a very dynamic year. What has happened in that year? Definitely, COVID crisis happened. And second, because of the COVID crisis, what happened was all the bank started pumping and distributing their currencies in their economy. For example, in the month of March 2020, Fed, which means Reserve Bank of USA, had a balance sheet size of $4.3 trillion. By the March 2022, the balance sheet size was increased to $8.96 trillion. Basically, they have printed close to $4.5 trillion in 2 years. They've printed and given money to their economy to boost the demand. So now when they have done that, what has happened to dollar index? Before that, let me just explain to you. Dollar index is an index of six currencies which measures the strength of dollar versus other currencies. So if you see the chart, dollar index was trading close to 105. From 105 level, it went to as low of 89. So a fall of 15%. ये क्यों हुआ? Basically, it is simple economics. Whenever you increase the supply of anything, the price of that commodity has to fall down. So similarly, in US, they have printed close to $4.5 trillion, because of which there was dollar in the market, and dollar index fell down by 15%. This was year 2020. Now let us see what happened in 2022. 22, we all know there were there are two eyes which happened. First was inflation. Inflation across the globe was at the highest level. USA inflation was close to 9%. UK inflation was close to 11%, which was at 41 years high. So the entire world was facing one common problem, which is inflation. Basically, inflation means mahangai. Now, what whenever there is an inflation, central bank will try to curb the excess liquidity by increasing the interest rate. 348 central bank across the world have increased the interest rate in 2022, जिसका pinch हम सबको है. Our all EMI cost has increased. Housing loan EMI cost has increased. Car loan EMI cost has increased. And if you are having a business loan, that EMI has also increased. Basically, the interest cost has increased. Now, let us see what happened to dollar index at that point of time, 2022. Now, when you are sucking liquidity from the market, dollar index has to move higher and higher. Dollar index from 89 level straight away moved to 114 level, which is a rise of 28%. At CR Forex, we predicted this kind of a move in the month of November 2022. We said that history in the making in dollar index, and dollar index is going to move towards 100 and above level. We regularly like articles for CNBC Financial Express. If you can go to our website, you will find all our latest articles. Now, before we move to the other part of the presentation, let us take a poll. What do you think is lying for 2023? Option number one is recession. Option number two is inflation. Option number three, this is a new word, which has come in the market, which is called disinflation. इसका मतलब है कि inflation will come down gradually in the current year. So what do you click? You can write it down in your chat box, and we can see that. lot of people are saying that recession uh, uh, is likely to be a scenario in 2023. But let me tell you, there is a good news for all of us. I think there will be no recession in 2023. 2023 will be a year of disinflation. Recently, first Feb को फेड का मीटिंग हुआ था. In that meeting, 15 times in a 45-minute speech, Fed chairman said that we are moving towards disinflation. Now, let me give you few evidence for the same. One of the leading indicator what I have been tracking for inflation since last 20 years is Baltic index, which is a Fed index. If the Baltic index is on a falling side, we can say that the inflation is coming down. So if you see the chart in 2021, the Baltic index was moving higher. 2017 to 2021 is a period when it was in a very narrow range, and then suddenly in 2021 it has moved very high. From that peak it has started falling down. From the peak it has fallen down by 8.1%. So this is giving us a clear cut indication that inflation in coming years is going to go lower and lower. Now if you see UK में, यूरोप में, US में, the inflation has already started coming in, and in India also the inflation has started coming in. Now, if inflation is coming down, no, I'm able to see this. Okay. Are you able to see the screen?
Now, yes. Oh, no, now it's not visible.
No.
It was visible momentarily, and then it went off.
Okay. Okay. Now you can see the screen.
No. Yeah, it's coming. It's loading. Yeah.
Okay. At any point of time, if you're not able to see the screen, just let me know. I will stop for a while. Whether this we were able to see in the screen, Baltic index earlier.
No.
Let me come back to that again. So basically this is one of the leading indicator what I have been using from last 15 to 20 years to see whether what is the trend on the inflation. From 2017 to 2021 the index was trading absolutely flat, and in 2021 if you see the screen the index went very high. So it was giving us a clear cut indication that inflation will be there. Now, if you see the inflation is on a falling trajectory, that index is on a falling trajectory, which is giving us an indication that inflation in the coming year is going to come down on a slow basis. Now, if that happens, this the second data is also giving us a clear cut indication that somewhere in UK, Europe, and USA, inflation has been topped out, and inflation is going to come down on a in a phased manner in coming days. So now when inflation comes down, it is giving us an indication that the Fed is not going to increase interest rate at a fast pace. If that is not happening, then we can see some kind of stability in coming days as far as all currencies are concerned. The second important indicator is the bond market. If you see the intermarket analysis, we says that bond market at any point of time the bond market is going to give you the first indication about the market, then the stock market is going to give you the indication, and finally the commodity market is going to give you an indication about the economy. So now let us see what has happened in the bond market in the month of January. In the month of January, according to Bloomberg, in the month of January 2023, the bond market has given the highest return since 1991. So basically, it means that stability is going to come in coming days. So that was the bond market. Now let us see what is happening to US economy as a whole. So if you see, I've divided the presentation into two parts. कुछ positive है, कुछ negative है. Basically, when we have positive also and negative also, so basically it means that chances are 50-50% of increasing the interest rate in the market. That is what the Fed said in the last meeting. They said that job market is doing good, growth is good, but there are some concern as far as manufacturing and industrial production is concerned, because of which they might have to take a cautious approach as far as increasing the interest rate in US economy is concerned. So basically, what will be the year of 2023? We have written an article in Economic Times saying that in 2023, in first two Fed meetings, the Fed is going to increase the interest rate, and then they're going to pause for some time, and probably last meeting of 2023, or early 2024, Fed might go and cut interest rate. So if that happens, what will happen to dollar index? So basically, dollar index is not going to move neither too much on a upside or neither too much on a downside. So basically, it is going to consolidate between 99 to 105. If dollar index is moving in a consolidated manner, we can be very rest assured that there is no recession coming in US in coming days. So if dollar index is consolidating, what impact it will have in euro and pound? Euro will also consolidate between 1.04 on a lower side and 1.11 on the higher side. What will happen to pound? In pound, we will see much higher volatility as compared to euro. On the lower side, 1.16 का level रहेगा. On the higher side, 1.2450 or 1.26. Now, when the currencies are moving in a consolidated manner, that is an advantage for an exporter. Sell it high, utilize your forward when the rates are lower. This is one of the key takeaway as far as view is concerned. Now, the similar kind of article we have written in Financial Express, when we have seen that dollar index has moved. I mean, the top. So we told that okay, euro is going to move towards 1.11 level, and pound is going to move towards 1.26 level. Basically, euro went to 1.14 and pound moved to 1.26 level just last few days back. Now, let us take a second poll. Where do you see rupee in next 3 months? Option number one is above 83 and a half. Option number two is 81, below 81. And finally, range between 81 to 83 and a half. So when dollar rupee is trading close to 82 and a half level, then ideally, a lot of exporter will be thinking that there are higher probability that the currency can move towards, it is in a above level. That is because it is generally said that recency effect, जो अभी हो रहा है वही हमको लगेगा कि आगे भी होगा. And I think a lot of people are saying that the currency is going to move above 83 and a half level. Now let me share what is CR Forex view. Before doing that, you know simply, if someone asks us what is the view on rupee, we see this simple six parameter. On an international factor side, we see dollar index क्या move कर रहा है, emerging market crude oil, domestic side पे trade deficit, inflows and RBI stance. Dollar index, we have covered that dollar index, we are expecting it to consolidate between 99 on the lower side and 115 on the higher side. And if you see the chart from Feb till November, and generally also, if you go back also, if you do a back testing for last 10 years, you'll be able to understand that there is a direct correlation between dollar index एंड रुपी. अगर डॉलर स्ट्रांग होगा तो रुपया वीक होगा बेसिकली. So generally that is the trend. So basically last year when dollar index was trading at 89, rupee was trading close to 74, and dollar index went to 114, and rupee made a low of 83.25. Today rupee is at close to 82 and a half. Dollar index has come down towards 103. So if you see, there is a lot of divergence. There is a lot of divergence in the chart, what you can see. Now, I've already told that dollar index is going to move between 99 to 105. Now, let us see where is going rupee going to move. तो एक इंटरेस्टिंग डेटा दिखाता हूँ आपको. डॉलर, दिस इज कॉल्ड एनालिसिस ऑफ ऑल करेंसीज अगेंस्ट डॉलर. So basically, dollar index has become weaker by 7.2%.
Okay.
Chinese currency, if you see, Chinese currency has become stronger in between November to Feb by 6.74%. Thai baht, the best performing currency, it is appreciated by 10.87%. Korean won, 10.9%. If you see rupee, हम नवंबर में भी 82.83 थे, हम आज भी 82.50 है. So basically the chart is clearly giving us an indication that all Asian and all emerging market currencies have become stronger, and we are still maintaining 82.50 kind of a level, which is giving us an indication that in coming days we might also become stronger. Now let us see other parameters also.
Okay.
The third important aspect is to see where is crude oil price moving. We have a direct correlation with crude oil price. If the crude oil price moves higher, as a country, we are a net importer. If we are a net importer, if crude price oil price goes up, our trade deficit increases. So we have to see what is the outlook on crude oil prices. Crude oil prices was trading at 140 in the month of March 2022. It has come down to 70 level, and it is basically consolidating between 85-90 on the higher side and 70-75 on the lower side. I feel that the crude oil prices for the next 2-3 months are not going to break about 90 level, or neither it is going to break below 75 level. It is going to consolidate in this level for some more days. So if that happens, what impact it will have on us? Now let me give you another data point. you know the highest advantage, if any country has got of Russia and Ukraine war, the first is USA and the second is India. It has been a blessing for India because India did something which the entire world was not expecting. We started buying oil from Russia, and Russian oil is cheaper by at least 20-25 dollars per barrel, which is a huge amount of saving. Let me give you what kind of saving we're going to make out of this. So basically, we are importing from Russia at much lesser price. Pre-COVID level, Middle East was giving us 60% of the oil. Western country was giving us 9% of oil. Russia was giving us 2% of the oil. Now that 2% has become 28%. You know, some studies we did, and in that study we found that Middle East का जो cost of production है oil का, that is close to $25 per barrel. रशिया का जो है is close to 35-40, and US का जो cost है that is close to 60. Now if you calculate the math, India have chosen to move to from other countries to Russia. By doing that, the trade deficit is going to come down. So basically, in a year, we import close to $180 billion. Now, if I combine the effect of both lower crude oil price and importing from Russia, it will have an impact between $25 billion to $35 billion on an annual terms. Because of that, we expect our trade deficit to come down gradually in coming days. That is about trade deficit. Now, the best part in the entire presentation is this slide. You know, I will say that well played, India. You took an advantage of the situation. What advantage we have taken of the situation? हम रसिया से ऑयल इंपोर्ट करते हैं and we are exporting it to US and Europe. The chart is clearly showing us that our export to Europe and USA has increased. इसको कहते हैं बिजनेस 40 में खरीदने का 80 में बेचने का. Well played, India. Now let us see what is happening to Indian economic data. Indian economic data is फैंटास्टिक. जैसे इंडियन क्रिकेट टीम अच्छा क्रिकेट खेल रही है, इंडियन वुमेन टीम अच्छा क्रिकेट खेल रही है, वैसे ही इफ यू सी द इंडियन इकोनॉमिक डेटा, inflation is coming down, industrial production is going up, manufacturing index, manufacturing PMI index is above 55, service PMI index is also above 55, trade deficit is coming down gradually. All positive sign for Indian economy. Now, let us see what is happening as far as equity market is concerned. If you see the first part of the presentation, FPI flows, Indian equity mark, Indian equity markets, FII has been just selling. Between July till Feb, they have taken money, close to $11.8 billion, but index remains close to all-time high. Still close to 18,000. So because of global inherent demand as far as Indian domestic institutions are concerned. Second part, if you see that in coming days there are a lot of inflows which are expected to come. Today also there was some RBI green bond was there. The inflow was close to 1 billion. So in coming days, we are going to get lot of money as far as a bond market is concerned. In the between Feb to May, we are expecting a minimum amount of money close to $9.2 billion, which is a positive sign for our currency. लास्ट तक जाते हैं. If you have to make a view on dollar rupee pair, then the most important thing is what is RBI stance. Now let me tell you, RBI is playing on both sides of the market. In 2021, when the currency was at basically when if you see the chart in March 2022, our reserves were close to 606 and our rupee was trading 75.78. By October, our reserves have reduced by $75 billion. So when the currency was weakening, RBI was selling dollars. In the upside, you can see that when the currency was appreciating, RBI bought reserves. Let me give you another example. In the month of November, uh, close to 10 November, rupee went to as low as 80.50. RBI intervened and protected the rupee. If you see, RBI forward book have increased by $8 billion between October end and November end. This was exactly matching with the date when US CPI data came, dollar index fallen, rupee made a low of 80.50, and because of RBI buying, rupee bounced back towards 81.60 and 81.80 level. So basically, RBI is managing volatility on both the side. They are buying at the lower level and they are selling at the higher level. So basically, if we see, if we have to summarize entire thing, we can see the positives are more, negatives are less. So based on that, for the next 3 months, we expect that there's a 90 to 95% probability that rupee is not going to break an all-time low of 83.25, which had made 2 months back. And ideally, the pair should move towards 80-50 in coming days. Any level above 80 to 40 is a good opportunity level for an exporter to hedge. Any level close to 80-50 to 81 is a good buying zone for importers. Now, every week we published a YouTube video on Monday morning where we give what is the view in the market. And on 2nd Jan, we released a video when rupee was trading at 82.70. On that video, we said that okay, rupee is going to move towards 81 and a half to 81 level. Similarly, if please make a note that today also I'm saying the same thing. Rupee is trading close to 80 to 50, and in coming days it is going to move towards 81 and a half level, a very very important level as far as exporters are concerned. Now, view is on the one side, we have to hedge our exposure. So let us move to hedging part of the presentation. So in CR Forex, what we have done is that we have uh, we have categorized exporters into two buckets. First is a thin margin exporters. When I say a thin margin exporters, when I say a thin margin exporters, it means that exporters like agri exporter or a chemical exporters who are basically traders with lower margin and who take costing close to spot, and their payment cycle is between 30 to 45 days. So for them, ideal strategy is to cover on a back-to-back basis, and they should cover 70 to 80%. But in today's scenario, if you are a thin margin exporter and you have taken costing close to 82 or 80 to 50, just cover back to back 100%, because there are higher probability in next 8-10 days the currency is going to move towards 82 and 81.50 in coming days. So now let us move to the second part, second kind of exporters. Basically, we put them in a bucket called thick margin exporters. Generally, they are like textile exporter or a pharma exporter or an engineering exporter. They are manufacturers, and they take costing well below the spot, and their payment cycles is between 90 to 150 days. For them, the strategy is to have a hedge ratio between 40% and 60%. When you think that the currency is going to get weaker, you have a hedge ratio of 40% or say 30%. On and when you think the currency is going to get appreciate, then you should keep a higher hedge ratio of 60% or 70%. So for example, currently for thick margin exporters, they should cover 60-65% on an annual term basis, between 80 to 50 or near to 80 to 50. So when the dollar rupee comes towards 81.50 or 81, they should pre-utilize all the profitable forward which they have booked at the higher level. Now, what is the strategy for importers? As the overall view is that the currency is going to appreciate in the coming months, we suggest them that they should ideally, if they were to take any kind of funding, they should not take INR loan. They should take buyer's credit at close to 82 and a half level, which they should hedge when the pair move towards 81 and a half level. They should only hedge their near-term imports when 81.50 comes. For covering medium to long-term imports, they should wait between 81 and 80.50. And the last part, which is very very important, what I've learned in last so many years while doing business is that anything what you do in business, it has to be reviewed, and it has to be measured. So when you are doing any kind of forex transaction, you must measure what is the profitability, what you are going to get out of hedging. So basically, a simple sheet: what was the costing, and what is the conversion rate, and what is the market rate. You should evaluate that, what money you are making against the market and what money you are making against your costing. If you do that, it will give you a clear cut indication how well you are hedging or you are not hedging in a correct manner. With this, I will end my today's presentation.
Okay.
Uh, over to the audience and they can ask question.
Yeah, we have one question from one of our audience. This question is from Mr. Vinod Chaube. Mr. Vinod Chaube wants to know, Mr. Amit, the INR payment arrangement between India and Russia, is that making any difference to our economy? And is it good to have INR trade with Russia?
Uh, Definitely, if as a country, if you're importing, uh, in rupee terms, that is good because our dependency on dollar will reduce, and with that, our trade deficit will also reduce.
Okay,
So it's a
okay.
good thing.
Yeah, okay. So basically, you're saying that the INR trade is helping our economy to reduce the trade deficit.
Yes.
Okay, okay. So I think we are nearing the end of our presentation because it's close to 4 o'clock. So I would like to mm, close the session with a vote of thanks to Mr. Amit. It was quite an insightful presentation. It was a very useful presentation. I liked the part where you had said that the disinflation is what is expected in the current year, and you expect the Indian rupee to get stronger over the short to medium term. So that's quite a positive news. That's quite positive expectation from your side. We have another question uh, from Mr. Naman Soni. We are a textile exporter, an MSME. Till 2 or 3 years, the turnover was less, but now we propose to have a big order, and the bank is unable to support. So yeah, so I think that question is for India factoring. So the question is, how can India factoring and CR Forex help? Amit, would you like to answer first?
Yeah, basically, India factoring will help you by giving you money so that you can finance your export bill, and CR Forex can help you in two areas. First area is whatever the cost the bank is charging you on the forex side, we will validate that cost, and if they are charging that cost on a higher level, then we can reduce that cost. That is the first thing what we can do. Second, uh, is that CR Forex team will help you to maximize your revenue with forward booking. So, for an example, if you are, if your order is come came at 82 and a half level, and the currency is expected to come down towards 80-50 level, so it is important for you to hedge it, uh, you know, in anticipation of your order. So, we will guide you when you can hedge and what platform you should hedge and how you should negotiate with your bank as far as hedging and other costs are concerned.
Mr. Naman, also from India Factoring, please visit our website. The contact numbers of all our relationship managers has been provided. So please contact please contact the numbers provided in our website. I'm sure we will get back to you with a effective solution. I think we'll have to close this session. It's quite late. Mr. Amit, it was a pleasure to have you on the show. A very clear-cut presentation. I really enjoyed it. I thank our audience for the interest shown and for the time invested. I would like to inform our audience that India Factoring conducts these shows on a regular frequency, and we will come back to you with another one pretty soon. Meanwhile, this is Ramanathan signing out. Thank you.
Thank you everyone. Jai Hind. Namaskar.
Thank you.